Ladies and gentlemen of the crypto space, we're live on Wednesday, May 4th at 4:35 p.m. It's late in the day. We're going to get a quick stream in. This is a good topic and something I've been working on a lot lately. And you guys know how much I think about managing assets, the portfolio, and really the psychology thereof. And this is all a game of psychology. And what I wanted to talk about today was how we view these assets that are constituents to a structure called a portfolio. And I'll give insight into really how I think about them. Now, obviously, portfolio size is a significant psychological factor. People get hung up on not having enough principal balance. Let's say you have 5,000 versus 100,000 versus a million versus 5 million. I could give insight into the fact that I don't have the largest portfolio. I know people with 5, 10 times the size of the portfolio as myself. So at points in time in my process, evolutionary process, I'm like, I want to be at that larger portfolio size. And to do that, you really need capital gains, and which means you need time and effort and risk and your attention. Your eyes are on the market, your eyes are on the charts, you're expending energy, you're building frustration, you're dealing with anxiety. And I know because I've been there. Now I know that the anxiety is not sustainable. There's no way. I guess there's traders. I guess old school Wall Street traders are like, yeah, that's business, but that's not sustainable, man. That's not healthy. There's no way to attack a market and maintain sanity behaving like that. And sure, you can make good money. There's plenty of people that came out of 2020, 2021, and not really 2022, but the last 2 years making significant gains. Now, we've played capital gains, and you can play capital gains, but really what I'm talking about in this stream is isolating parts of the portfolio and carving it up into very rigid structures. And it's really how you frame the way your mind thinks about the different parts of the portfolio. And you guys and everyone can think about like a lockup, a VE position, a 4-year lock. It's an isolated part of the portfolio. And does a position really need to be locked for 4 years for it to be considered psychologically a sectioned off, isolated part of the portfolio? No, that's just a part of self control. So, self control is a significant part of how we manage assets and how we factor in behavior that's needed for the portfolio to really achieve what you want it to achieve. And what do I want the portfolio to achieve? I want the portfolio to work for me so I don't have to work. You'll notice how I say that, just the thing I said, and that really plays into a lot of the things we've talked about over the last 2 years. Put your assets to work so you don't have to build a pizza shop, which is a business that produces a revenue stream. Doesn't matter how much the pizza shop's worth, just as long as the revenue comes in the door. So those are really isolated parts of the portfolio. And what's happening for myself is the evolution of how I think of these things. And I'm feeling more and more comfortable with these long-term lock positions. I'm feeling less and less anxiety and really not even looking at the price point. Or when I do, I'm like, all right, cool, it's going up. All right, cool, it's going down. But I have a very long-term mindset at this point, and I'm more excited about the volume through the system for the next 5 years, and I could really care less about the price point. And what I've done nicely is I've isolated the portfolio, not thinking too much about the total valuation of it. Now, it's nice that it has become what it's become. And even if you have a 10, 15, $20,000 portfolio, in 5 years' time, you think it's going to be 5, 10, $15,000? No, it's going to be significantly more. So time is the most critical factor in portfolio functionality and growth, be it the principal or the revenue it generates. So that's kind of what I wanted to hit on. I wanted to talk about carving off cash versus assets, what type of assets, and as you compartmentalize these parts of the portfolio, you treat them differently. So, does the principal value of VECRV matter at all, or CVXCRV? or vote block, VLCDX? Does it matter? What's pertinent is the cash flow it generates. Now, how many folks on the stream, probably one of the most interesting things I'm entertaining right about now is like a BitPay debit card or any type of crypto debit card where you can take cash, put it on the debit card, and spend it and use it for consumption. Don't spend your principal. Don't spend your money. Don't spend your assets in your portfolio. You put that shit to work. And the revenue, the income that your money makes, that you spend. Now, just as with work and employment, let me pop it over to the main screen. We can take a look at this very nice curve chart while I talk about this. Just as with employment, you get a paycheck and you're like, all right, I'll put some in savings. I'm going to spend some of it on my mortgage payment, some of it on gas for the car. So, but you put some of it in savings. That's the same with the revenue you get by your assets working for you instead of you having to work. Your assets are an employee. So as your psychology evolves and you're able to section off parts of your portfolio and construct this entity, really push it away from yourself and think of it as this just abstract entity that exists that's not you, it's your assets, but you control them. This goes into like Rockefeller's historic comment where own nothing but control everything. So your assets, they're not you, they're something else. Uh, so you don't really own them, but you control the shit out of them. I guess you own them, but that's just on paper and the historical way everyone thinks about these things. But it's kind of an employee that's working, you control it, and it pays you. So it's a business, it's an employee, and just don't try and find peace with the volatility of the markets. And that's something that has taken me a long time to really get to. And I like the cash flow. And I grow the bank account. And I'm tempted every now and then to buy something. I know I've talked about Citadel. I'm tempted to, I mean, Curve's breaking the 100 SMA on the daily. So I happen to buy it $2.09, give or take, $2.10. I actually doubled down on the position over here at about $2.10 and then back again. I didn't add much. I should have added more, but I took was that 10%? Over 10%, a little over 10%, about 12% bump in the overall VECRV position at 210, which is pretty cool, aside from the historic position, which is obviously significantly cheaper in price point. But so when you have cash, you have your stable coins, you can't spend all your stables. You can't ever go all in. You need your cash because you're going to have to buy some shit when you go to Walmart. You got to swipe a card and you got to buy something. So you can't put all your cash into assets. And you need to cover your overhead, meaning everything that you need to pay for on a monthly basis. So you can't put all your cash, your stable coins, into positions. So I'm starting to think of everything we've done for the last 2 years and starting to reframe a lot of those historic phrases and those historic stories that I've told you guys and let them evolve and let them grow. And you'll notice everything I'm saying today is the same thing I've said for the last 2 years, but it has a different tone. And I'm feeling much more comfortable that it's a sustainable methodology for interacting with these systems. I look forward to payday. What's payday? Hey, tonight at 8 o'clock, it's payday. We got to click that. We got to click the claim button. It's payday. How is it any different than payday? Extraordinary. Click a button and you get in money that you could put on your BitPay the debit card, and you could go, and literally it takes 3 minutes to put on your card, and you could go to the store, you could go to the supermarket, and you could buy food. You could pay for dinner at a restaurant by clicking a button. We, in many regards, have taken it for granted. This DeFi thing where you click a button and it gives you coins. This isn't a give me coins button. This isn't some DeFi shit that all of us really take for granted. This is a goddamn payment button, guys. This is a good thing or a big thing that I do is I like to think of the things that we do on a daily basis, and I try as hard as I can to realize what it is if someone else was looking at it. Someone that has no experience whatsoever with the crypto space. And if anyone else on the planet knew that I could click this button in 3 hours and claim 2,489 curve, which I could put onto a debit card and go to Best Buy and buy a TV, they wouldn't believe it. They wouldn't believe it. It's the most wild thing. So you guys are obviously going to get off the stream. You're going to go continue doing what you're doing in the DeFi space. We've all been successful to some degree or another. Try your best to get what's called an objective perspective. Try and break away from the fact that you've been doing this for the last 2 years and try and think about this stuff as if you've never seen it before. And hopefully that will lead you down the road of a fresh perspective on everything we do. This is a paycheck. That's crazy. So what was the title of the stream? Isolating parts of the portfolio, full-on banking passive mode. There's full-on banking passive mode. Look, between this screen right here and this chart right here, my bank, well, not really my bank account. I consider the stable coins my bank account. Then this is an employee that produces a weekly salary, and that all I have to do is click a button. So don't sit there staring at the curve price. Maybe, I guess, if you want to find an entry, and I'm thankful that I was able to make the decisions I made over the last 2 years, that I have had entries and I have a position, and that position is ancient in crypto terms. It's 2 years old. I was one of the first buyers of Curve as this shit was collapsing all the way down. I mean, I've bought Curve here, literally September of 2020. I didn't buy here. Maybe I bought here in August of 2020, but I was buying all this initial leg down. 30, 40, 20, well, not 20, but 32 cents. I remember buying in the 30s. I remember the 40s. This was a different Noah. It's a different crypto space. It was a different world back in 2020. This was wild. And I would never, if I, this time period, this Noah right here, would not even recognize myself right now. I'm a completely different person on these charts. And this has been a wild ride. So don't forget to press the claim button so your employee can pay you your weekly salary. Treat it as income. You don't invest all your income. Put some of it in a savings account, in a bank account, which is basically what? USDC. You put it on a debit card and you could go out to dinner. Some of it, maybe you want to buy some Curve, maybe you want to buy something else, whatever the hell you want to buy. But you want to be very, very hesitant. We've thrown around cash. We've thrown it around very loosely on very risky things, new technology, new systems, untested, high risk. Take a step back and realize that we've probably pressed the button too quick. And you should be much more prudent, much more well thought out before you actually execute a transaction. Hope that helps. 25 people in the stream, 5 likes. We can do better. Late in the day, but we got to get this stream out. We got to get you guys a stream on a Wednesday. Dan's in the house, a pleasure. What's my thoughts on the market? Woo! Look at this. Curve is sitting at 260 off a bottom bounce of $1.98. I like that it pushed past the 100 SMA. I would love to see it hold on the 100 SMA as support. It breached it clearly the last time on the 26th, which was last week. We breached it, but it didn't hold the support. We didn't even touch it back on the last high on April 3rd. I have all the overtones. Look at the ellipses that I've drawn, all the overtones of the last market down cycle are present. And you can really see them on the 100 SMA. It's quite remarkable. You had a big dip down. This was the big liquidation last summer. It was the cascading, leverage liquidation. But we had a push back up to the 100 SMA, a failure. The second peak didn't even hit it. Then the third peak pushed above it and smacked into 200 SMA as resistance. So we're not quite there yet. The 200 SMA is much higher than the 100 SMA on this chart in this time frame. So we're nowhere near a bullish cross of the 100 SMA and the 200 SMA. But I like seeing it push above the 100 SMA. That's like the first goal. We got to get above the 100 SMA. We got above the guppies. Take a look at the guppies compared to the 100 SMA. So back then, the guppies were much lower than the 100 SMA for a fair amount. No, well, not really. Look at the top of the guppies. Here's the spread. Look at the spread. Price range. Let's take this peak. About a 17% price spread. And then if we go over here, there's a much, but we're below the guppies. But look at the guppies at that some of these peaks, 17%. So there is interesting analogy between the price point of top of the moving averages of the guppies, the top of the price point, and the 100 SMA. Your eye could go to a couple of different places on this chart. But look, we're above the guppies. We broke above the guppies once, twice. This is the third time to break above the guppies on the daily. This broke above the guppies once, didn't even get to it twice. Third peak didn't. Bottom of the guppies kind of held the support. Maybe the TWAP down here, the 50 SMA could be considered support. Where's the 50 SMA in here? We're above the 50 SMA. See it back there? Let's see it. It's in green right about there is the 50 SMA. Obviously the 10 SMA, obviously above the bottom of the guppies. I mean, these are very interesting charts to look at. I mean, macro conditions is what we've been looking at really over the last year extensively. But from a technical perspective, what do we got aside from macro? So you have compression. Look at the compression and the breach above, and you see the gray guppies. If this guppy right here starts to turn gray and we start to see support on the 100 SMA, man, this chart's going to look good on the daily. Let's zoom out real quick. I know I'm talking about curve a lot, but yeah, you want to get above the guppies on the weekly. What a remarkable chart. 290. We breach above $3 and we start to put $3 in as support instead of resistance. Is that the 50 SMA up there? What's above there? That's just the guppies. 50 SMA is down here. I would love $3. We're at 259. We breached $3, turned $3 into support. Man, that's a heck of a historic price chart. We had a bearish engulfing last week. I would love to close the week on Sunday. If we could close the week on Sunday above 275, talking about a bullish engulfing, would offer a very relatively large red candle, and that'd be quite reassuring. What a volatile market. Look at that, 270 down to 2. Oof. Look at the volatility week over week. Those are 3 extraordinary candles that'll drive any normal investor nuts. Tyler's in the house, a pleasure. Steeler Nation, any interest in the near ecosystem? Not really. I like what they're doing. They're giving me Luna vibes, but keep your eye on it. You guys are probably going to be doing more interesting things than me. I'm very passive lately, and I'm talking about probably just either adding the curve, maybe trying to see how convex is doing at a bottom. But I'm quite interested in Citadel. And the last thing I'm going to be doing at this point in time is deploying all stables. So historically, we've done that. And I've told you I've done that. And I'm telling you this time, I don't think of stables the same way. I think of it as cash in a bank account. The fact that I have these payment pathways set up where I could transfer capital to the BitPay card and I could pay for my daughter's school, my car payments, everything. I could pay everything. It's a damn debit card. We've underestimated what we can do. If you go to the bank and you look at your bank account, I I challenge you all to look at your USDC balance the same way. And that's probably my biggest revelation over the last 2 weeks. Now it's words and me just saying this shit, but it's a very different sentiment. Maybe it was an epiphany, maybe it was a realization, but I wouldn't empty my bank account. I'm not going to do that. Quite a turn of events lately. My issue with 4-year locks is that if your thesis narrative is invalidated, you can't exit your position. So now this is a historic conversation, and you're talking about windiness. And what is the likelihood of a protocol existing into the future? So the likelihood of a protocol existing into the future is kind of proportional to how long it's existed. The longer a protocol exists, the more likely it is to exist into the future. Now, with Curve, is there something that's going to disrupt it? Can something disrupt it? Does something disrupt an ongoing disruption? Things have tried. There's plenty of protocols that do exactly what Curve does, yet Curve remains with its moat. It remains with its monetary policy. It remains pretty much the premier way to bootstrap a protocol's asset, because why pay to incentivize liquidity when you can get someone else to pay for it? That's what Curve does. A Curve gauge gets Curve to pay for deep liquidity. There is no protocol other than Curve that does that. Uniswap does shit. It literally is. At this point, it's like just VC uselessness. There's zero, literally negative reason to own UNI, the asset. It's useless. It's worthless. It pays you nothing, and who gives a shit about governance? Now, interestingly, incentivized governance with Curve and the bribe system and Convex, you get the overtones of, man, aside from that thought, it just works. People are paying to drive liquidity to be paid by Curve instead of them. The sequence, the flow, it just makes sense. So Curve has literally no inflation. It's like 1.4% that's not consumed by Convex, and that leaves 1.4% to be consumed by the rest of the entire market, including what I've bought and other people and everyone. That's the total inflation over the last, since Curve was launched, Convex was launched. There's basically no inflation. It's just literally an MMT money printing machine. It's the wildest thing. Not even in hindsight, it's still the wildest thing that I could possibly talk about. The monetary policy and what's playing out with the federation of protocols that are mandated to put the CRV asset on the balance sheet under all conditions for the need of their protocol is historic. The only thing that's even remotely comparable to the buy pressure on Curve is the dollar. This asset is you're looking at a chart of an asset that's hyperinflationary. The amount of Curve that is created on a daily basis is enormous. I don't have the number, but I'm pretty sure our jaws would be on the floor if we saw the number. But it's massive, massive hyperinflation every second of every day. Yet the chart doesn't go straight down. Why? That's what we've talked about. And that's why this is probably a historic protocol, because of the damn federation of protocols mandated to put it on the balance sheet. Barry's in the house. DGB, brother. Always a pleasure, my friend. DGB. Digi. That's how we started this whole game. Oh, Digibite. Maybe it'll have its day. I know folks are still working on it hard. I mean, Matthew's been doing wild stuff with Digi assets. Now it's a different realm of conversation. I'm not going to digress too much, but I wish the best. noble, honorable intentions, core UTXO, all the good qualities you want, the purpose and meaning of the protocol. It's all good things. There's literally not a bad things to be said about the protocol, other than the price point is painful. It's not a great asset for appreciation. It's not a great asset for producing revenue and paying for things like dinner. But it's a beautiful asset with its intent and purpose. And that's what will always be the case. Larry, back to basics. This is back to basics. Passive income is why we did start this whole stream. This is a very different way to attack these markets where you go on Twitter. It's like, oh my God, you got to buy now. It's going to go to the moon. I don't know. Give a crap if something's going to go to the moon. I want to know how much something is going to pay me at the end of the week. Am I going to get a bonus? Can I go on a vacation? You know how I know if I'm going to get a bonus and go on vacation? Maybe a new protocol launches and they're like, and it's backed by VCs and they got billions of dollars worth of funding and they throw up $10 million worth of weekly bribes on convex. Yeah, then I'm going on vacation. That's your bonus right there. Getting, it's come a long way, Larry. Yes, indeed. Getting on the bet swap whitelist for staking has me very excited. Lock up BSGG for 365, earn 200% APY. Look into the monetary policy, look into the source of revenue, make sure that 200% APY, maybe not APY, maybe APR, APY is compounded, and make sure it's not excessively inflationary. As you guys see what has happened to the STG price point, it's because the monetary policy wasn't there. Now, I know the boys, I've talked with a lot of them. They're doing the right thing, hitting monetary policy right about now. But, you know, we saw this coming a mile away. Now, the technology is real. It is some of the most breathtaking technology to have been released and launched in the crypto space in quite some time. But the monetary policy is really what manifests the price action. So we knew what was going to play out. We talked about it. Joe, crypto bets. What's up, Captain? It's been a long time. Uh, this is a happy hour stream today, boys and girls. I think guys got to hit the bar after this stream and think about this stuff. This stuff will stuff we talk about reprograms you. That's the whole point of the stream. It's the contrarian thoughts. It's the different perspective. And literally, the homework I gave you guys today is to look at the claim button as if you've never seen crypto before. If you've never seen it before, what would you do if you were 18 years old and someone showed you a button that was going to pay you that you could put on a credit card and go get dinner? You would fall over backwards. So that's an interesting, I could segue into. I would love to see my account balance at 10 times what it is. But if you look at the revenue stream, humble yourself every now and then. If you look at your weekly or bi-weekly, if you look at your monthly revenue stream, what would you say if you were 18? I'm pretty sure for a lot of you guys, you'd be on the floor. I know for a fact if I wouldn't believe it. I would never believe it in a million years that I could click this button. If I click this button, I get 3 times my entire monthly salary when I had my first job out of college. Now that's some perspective. And every second that I want my portfolio to be bigger, I remind myself of that reality. I used to work a month doing tech support at a credit card company. 8 hours a day, 3 hours of driving every single day, 5 days a week. And I press this button and I get 3 times the amount of money in 1 week than I got 40 hours a week, 160 hours a month, and all that driving in a click of a button. And if that can't humble anyone, If I can't humble anyone, that psychology is needed. Because that sure as hell humbles me to realize I'm out of my mind if I'm going to do anything else in the crypto space other than sit back, focus on my family, go out to dinner, and press this claim button and be happy, happy, joy, joy. What's good? As soon crypto bets, are we CRV maxis or CVX maxis? It depends on the time of the year. The capital will fluctuate between the two assets or the two protocols. Um, and it's a historic conversation. There's no real way to know other than hindsight. Brady's in the house, a pleasure. Smack the likes, 40 people in the stream, 24 likes. We did better. Anon, has Phantom Chain been ruined? I don't think so. Phantom Chain is a heck of a technology, clearly. Psychology and fear, FUD, spreads like wildfire. Spirit's been hammered. Liquid, they've all been hammered. And Beethoven, I like Beethoven. They were building a heck of a federation. Bear in mind what you're seeing in the Phantom space uh, is basically the cooling off of exuberance. And that was DeFi. So they're going through their first DeFi summer in many regards. They were late to pick up steam. I remember when, what was it? Multichain.xyz, the original, multi-chain, whatever it was called. I think it was multi-chain XYZ. Um, but there was no liquidity. There was no such thing as bridges. There was no such thing as getting capital over to Phantom. That didn't exist. There was no. I remember the. Don't you guys remember that? Wasn't that wild? When we saw Curve launch on Phantom, and you're like, how the hell do you get capital over to Phantom? But what's playing out? What is playing out, boys and girls, for 2022? Seamless cross-chain interoperability. I nailed this one in December of 2021. There was a time that there was no bridges. There was no Stargate. There was no multichain.org. There was no whatever the native bridge, Arbitrum. There was no, oh, I don't even have them anymore. Avalanche has its own native bridge. There was no bridges. This stuff didn't exist for, I would say years, but it was probably like a year and a half, 2 years. And then the bridges started to come online, and Stargate really offers, and multi-chain's multi-message protocol offers seamless communication between protocols, and that changes everything. So this is probably the narrative that I killed for 2022. People move assets cross chains seamlessly. It's like a big ecosystem. It's a giant DeFi party. Back in 2020, there was no DeFi party. It was Ethereum mainnet, boys and girls. There was no cross-chain interoperability. Hey, Noah, do you know if holding Badger would be exposure to Citadel? I think some folks are late, but there's the Badger checker that tells you if you have whitelist exposure to Citadel. I'm pretty sure Badger is too late. I think the snapshots have already occurred. Do I have it? I don't have it. It's in Badger Discord. Citadel. There's the checker. Let me see if I can find it. Bear with me. Where could someone post a link to the veric? Oh, here it is. So citadeldao.io hashtag verification. Pop your address, and you can tell if you're qualified. Now, if you're a Badger guy, you would see Badger. Obviously, my qualification comes from Convex and Frax, which I was like, yeah, that's very nice to see. So that was cool. Look at this nice wallpaper from Exodus. That's very nice to see. Not that I would ever use it. Near an Aura and Moonbeam and Moonswap. There's so many chains nowadays. If you go into multi-chain, you go into the pools page, or rather here from mainnet, you see all the destinations. Like, I've never heard of it. What is this stuff? You know what's interesting? Rootstock. Do you guys know that Rootstock is Bitcoin? This is a Bitcoin secured EVM blockchain. Did you know that Syscoin is a Bitcoin secured EVM blockchain? These two are very interesting in the next couple of years because you could transfer to them, and they don't have the mature ecosystem that Phantom and Avalanche have at this point, or even Arbitrum or Optimism. But they're getting there, and it's secured by Bitcoin. Last couple questions, and I'll wrap it up for today. Gada knew my lack of Ethereum knowledge was going to come back and haunt me. What was the question? Not necessarily. Don't worry about lack of knowledge. There's always a path, and there's always something next, my friend. What do you target APRs that I look for? Okay, here's the deal. So Curve's cranking out like 40 something percent. I remember CVX CRV at 90%. I remember VECRV at 70%, 80%. I remember when Curve was doing $800,000 a day, not $300 million a day. I remember that day, the tweets when they cracked $1 million a day. That was wild. They were ecstatic when they broke 10 mil. They're like, "What the hell is going on?" And now on a hot day, they're doing $1 billion in transaction volume. So, what was the point of that? The point of that was your APRs question, Daniel. So, my expectation is APRs will keep coming down over time. And we'll have transitory periods of APR outperformance as we get volume spikes through these particular protocols. I expect the APRs to continuously get diluted and respond to additional capital inflow into the system. Now, what do you expect for capital inflow into the system over the next 5 years, over the next 10 years? What are we at? A couple $1 trillion? No, we're not even at $1 trillion in DeFi. So, do you know how many quadrillions of dollars are out there? There's $50 trillion in the global debt market between sovereign bonds and corporate bonds. 50 trillion. There's $750 trillion worth of leverage in the derivatives market. There's several quadrillion, $1,000 trillion in the euro dollar market. There's $14 trillion in every stock market around the world. I think a couple trill, and I think that's destiny. That's just my opinion, but it seems rational, and you guys are on the rational channel. We're going to wrap this up, my friends. What are your thoughts on Emerus? Isn't that Cosmos type stuff and their cross chain? Um, I'm not up to speed. No, I can't give a comment. Um, I think I missed a couple comments. Have we done an update on Citadel? Yeah, I look forward to the knighting round. I'm probably going to buy a little something. Found BTC in 2013, but didn't dive into Ethereum as it didn't fit my thesis. I'll pay for it one way or another. Well, Bitcoin will do you fine, but Bitcoin's a savings account. You know, in 2013, you would get that asymmetric appreciation. You know, you turn it, what, like $50 Bitcoin, you would have made millions. If you put like 10 grand in $50 Bitcoin, you would have made millions. But nowadays, 10 grand is going to get you nowhere. You put 10 grand in the Bitcoin, you'll have 50 grand in a couple of years. What are you going to get, a 5x out of it? You're not going to get the multiple. So it's not an investment, it's a savings vehicle. And you'll get, obviously, livable savings. You're going to outperform inflation, and then you'll get your multiples, but you're not going to retire. You're not going to turn 10 grand into 5 mil, where it's not going to happen with Bitcoin. But there's all these protocols in the DeFi space that if you go far enough out on the risk curve, that has happened over the last 2.5 years of this DeFi insanity. Uh, we've seen what's possible. That's what we've done on this stream, is digested all this insanity that that really needs exactly what we talk about, peering through the madness. What is the real infrastructure and technology, not looking at the crypto spaces for the insanity that it is, what is real and what is simple and what is passive. How can you attack this space passively? And that's what I focus on predominantly nowadays. Steeler Nation, did you ever figure out your tax question you posted on Twitter regarding buying a crypto wallet below fair market value? Yeah, I'll end up going over how my trust fund is created, but I need a little bit more time. I'm just setting up accounting, but I have payments and I have a lot of stuff configured. I need to get the bookkeeping in shape. I'll know more next week. I have some conversations coming up towards the end of the week. I'll be able to get these questions ironed out, and I'll have better conversation to be had next week. Building that right now and collecting fees. Don't forget to buy some dinner soon. Pay for something. That's the whole point of what we're doing, my friend. Passed on ETH at $8. Woo! Oh, I remember Ethereum at $40. I remember those days. You know what? I've been lucky enough. I'm pretty sure I caught up. Pretty sure I caught up to, like, if I put like 10 grand into Ethereum. Maybe not $8. Like $8 if you put 10 grand into Ethereum, you probably have a couple. You have a couple mil. What is that? 100, 200, almost through over 300%, 300x. So 10 grand, 10, 100, 3 mil, 3 and change, 3.5 mil. So 10 grand be worth 3.5 mil at $8. Crypto bets. Where are you parking stables these days? I disable all approvals and I keep my stables in USDC. I look forward to Bancor V3 and Catalog Finance, and it'd be very nice if I could get some stablecoin returns on savings. I don't deploy them. I contemplate maybe making like a Citadel purchase or maybe adding to Curve, but my stables are my bank account, so I protect it like an investment. I need that capital to live, to pay my bills. So I no longer have any expectation to go in. Maybe if I'm feeling frisky and risky, I'll do a cap gains trade, but I don't know about that. I think those days are long gone in my younger years. What do you think about GMX? That's cool. GMX is cool. I know some folks that have long-term positions. It's a big deal. Structured products is a big deal, and that's going to garner a lot of attention and capital in the coming years. Never really. I've had transitory positions, but it's not something that really suits my fancy in the portfolio structure. That's right, Brady. BTC is savings, everything else an investment. Yeah. I mean, like, what is Ethereum? Aside from like Bitcoin maximalist ideology that anything not Bitcoin is something else. I don't know because Ethereum is big and it has the lindiness. So really what everyone's afraid of is proof of stake. Now here's a thought experiment. What happens if proof of stake produces an extremely stable network that's, you know, uh, uh, it's disintermediated and distributed effectively? What happens if it works, as everyone thinks it's not, or the Bitcoin maximalists think it won't? Then Ethereum, if it works as expected, Ethereum will have a superior monetary policy to Bitcoin. So Bitcoin is inflationary on a daily basis that has 4-year cycles of disinflation. So that's powerful monetary policy. And obviously, if demand exceeds supply, that's also deflationary pressure, but the raw monetary policy still is inflationary on a daily basis. The kicker is, after the proof of stake merge with Ethereum, every single day there will be less and less Ethereum in circulation. It will become probably one of the world's few pure deflationary currencies. So technologically speaking, it will have a superior monetary policy than Bitcoin. Superior in that, with regard to price appreciative forces. Now, like a monetary policy with regard to a currency, excess inflation or deflation makes them very shitty currencies. But this currency, Ethereum, with a deflationary monetary policy, is going to encourage significant price appreciation. It's going to become quite scarce over time. So I like savings. I like investment. I like these terminologies. Um, Bitcoin's definitely savings. Um, I think Ethereum's going to become savings. And I think it's pretty much there, but we still have the little bit of uncertainty with the merge, how it plays out, and how the proof of stake network behaves. Lindiness, my friends, lindiness. As the technology exists, the longer it exists, the more likely it is going to continue to exist. In 3 years' time, and if the merge happens towards the end of this year, we're going to look back and it's going to become a savings vehicle. Oh my God, Austin, Doctor Strange is coming out. Dude, thank you very much for ending the stream very nicely. I don't go to the movie theater. I don't. But when a Marvel movie comes out, boy, this old man, this dad goes to the movie theater. I don't get excited like a kid very often, but I'm excited to see Doctor Strange this weekend. Ooh, like a kid in a candy shop, boys and girls. Last question. I see Ethereum as the digital petri dish. Well, it's a network. Um, what was well, you can't say what it's likely to do. What I know in my experience, everyone thinks, everyone has opinions. I don't think, and I don't have opinions. In what sense? We don't know what it's going to do until it does it, my friend. You can't say that. It may be something spectacular. It may be nothing at all. It may cause the crash of the century and everyone, including myself, we lose all our money. But maybe not. So, in that regard, it's still an investment and there's speculation. But if it goes over smoothly, as expected, and becomes deflationary, that's an extraordinary monetary policy. So, I'm pretty sure that statement will change if that is what plays out. So we only ever know in hindsight how to evaluate something. So that we'll see. I don't own any Ethereum. I don't own any Bitcoin. I find them to be stagnant equity. They have no use to me. Everything that I talk about on the stream is enterprise and business and cash flow and balance sheets and sustainable monetary policy. We want to watch the inflation. We got to make sure things are effectively deflationary or at least have deflationary pressures that stabilize a monetary policy. So I look at everything through the lens of monetary policy, just like a damn central banker. I might as well be working for the Fed at this point. I probably do a better job. Just saying. 46 people in the stream, 33 likes. We did better today, boys and girls. Wednesday, May 4th at 5:23 p.m. A little late for the day, but I wish you all a wonderful day. Thank you all for joining After Party on Discord for the most rational community in the entire crypto space. I love all you boys and girls in there. You mean everything to me. I wish you all a good one. NoahSimon.com if you need anything, any one-on-one advice, I'm more than happy to help. I will see you again on Friday. Peace.